I'll begin proceedings by simply welcoming everybody today to this QUT ACPNS Australian Centre for Philanthropy and Non-Profit Studies mini webinar about the ATO statistics on private ancillary funds, or PAFs as we all call them. So first of all, I would like to acknowledge the traditional owners. Queensland University of Technology acknowledges the Turrbal and the Yagara people as the First Nations owners of the lands where QUT now stands. And we repay respect to their elders, laws, customs and creation spirits. We recognise that these lands have always been places of teaching, research and learning. QUT acknowledges the important role that Aboriginal and Torres Strait Islander people play within the QUT community. So I'll just introduce myself. My name's Alex Williamson and I'm a postdoctoral research fellow at ACPNS here in Brisbane. And I have a particular and strong research interest in philanthropic foundations and ancillary funds. So our order of business for today is that we'll overview the data that we have on PAFs for the 2017-18 year, specifically looking at how these findings fit into a longer term context. And I'll pause here and mention our thanks to Mari Balson, who analysed the data for us this year and indeed in many of the previous years. So I will make some very brief general comments about what we've found in the analysis this year, and then that will be followed by perspectives from our three speakers. So we have David Ward first up, who is from Australian Philanthropic Services, followed by Dr. Daniel McDiarmid from AskRIGHT, and Krystian Seibert from Swinburne University of Technology and Philanthropy Australia, among the many hats that Krystian wears. So our panellists have been asked to speak for 5 minutes each on the significance of this new data in the non-profit sector broadly, and perhaps also through the lens of their organisations and experience. I'll note here that the full paper can be downloaded, the full report, for free from QUT's ePrints research repository, and the link for that will be provided, or has been provided, in your registration, but was also at the end of today's presentation. You can also download from the ACPNS website all of our previous research on ancillary funds. And just to flag for all participants that we have two 20th birthdays to celebrate next year, one for ACPNS itself as a centre, and the other is for private ancillary funds. The exact date of the legislation being passed, establishing what were then, of course, the prescribed private funds, is Monday the 21st of June. So on that day next year, we will be hosting a conference here at QUT in Brisbane to celebrate the anniversary and to look past and into the future for private ancillary funds. We are, of course, at this point not sure what form that event will take. Hopefully it will be a hybrid one so that people can attend either in person or online. So very briefly, the highlights from the data in 2017-18 were that the cumulative number of PAFs has increased. We had 155 new PAFs approved in that year, taking the total as at the 30th of June 2018 to 1,650. Collectively, they received donations of just over 1 billion. They made grants of just shy of 400 million, taking 394 to be exact. And in the data, there were a couple of surprises. First was the fall in the closing value of the combined assets of PAFs collectively. And there were also some interesting numbers that emerged in the distribution categories, and that data became available again this year for the first time in a while. And that, if anyone is interested, is in table 4 of the report. So now for our perspectives from our expert panel, insights from these sector leaders, beginning with David Ward. David, I'll throw to you. Thank you.
Thanks, Alex, and good afternoon, everyone.
David, thank you. That's perfect.
I'm pleased to be involved in this seminar looking at the 2018 PAF statistics. Now, one number I can update on what Alex just said is that since June 2018, there have been another 200 PAFs that have been added. in Australia, so it brings the total now to something close to 1,850 PAFs. Now, just to comment on the one slide that I do have, on the slide, the red bars show the donations made into PAFs each year, and the blue bars show the donations individuals make to DGRs through the tax statistics that are not PAFs. And firstly, as there was a bit of discussion on yesterday's webinar, you can see the upticks in the years where individuals have been motivated to give for specific natural disasters, the tsunamis, the Black Saturday fires in Melbourne, and the Brisbane floods, which increased donations in those particular years. But the main point of this slide is that over time, the introduction of PAFs has not reduced in any way the trend in increasing donations from individuals. And that was one of the concerns when PAFs was first introduced, but it clearly is something that hasn't happened. So PAFs have been a net contribution to giving in Australia and to the pool of community funds. Now, as a non-academic, I accept that there is some issues around the data in the sense that these two data sets are not totally compatible, but if anything, and the reason for that is that not all donations to PAFs came from individuals claiming a tax deduction. But if anything, it understates the amount of individual non-PAF donations. So I think the conclusion that PAFs have not damaged the individual giving and have been a net positive contribution to the philanthropic structures in Australia is valid, nonetheless, of that potential data uncertainty. And so we now have a pool of funds that are giving away, as Alex pointed out, just under $400 million each and every year. The second comment I'd like to make, also Alex raised, was the decline in assets held by PAFs in 2018 from 9.4 billion to 7.2 billion. In fact, the asset numbers in the PAF data series, as QUT pointed out, has been really somewhat volatile in the 4 years before 2018 and did not really reflect the change in market returns and the net inflows in and out of PAF. So there's been something that's a bit uncertain about that PAF asset numbers for a while, and we also know there are some specific individual PAFs that have had some major changes. So to my mind, the data does not indicate a decline in assets committed to philanthropic activities in Australia. I'd also like just to comment briefly on the distribution data that has come out, and on two aspects. First, as those of you know me, governance of PAFs is one of the areas that I do spend a lot of time focusing on, and there was in 2018 $17 million of donations out of PAFs to entities that were not actually eligible to receive money from PAFs. Now, 5% of total donations, so not a huge number, but certainly something that is enough to suggest that the PAF guidelines are not being fully understood by everybody involved in the sector. And it's important, I think, that governance is something that is focused on so that total confidence in the system remains. Also on the data, as Alex also mentioned, it's good to see that after a hiatus of 3 years, the ATO have released the breakdown of the distributions from PAFs. But unfortunately, the quality of that data or the usefulness of that data was somewhat reduced by the inclusion of a new category called multi, which accounted for 40% of all grants made by PAFs, which is one that needs a little more analysis. So hopefully that can be the subject of some further work by QUT or Swinburne or someone. But the important thing, I think, still is that welfare remains the largest individual sector for receiving support from PAFs, and is roughly at double the level of any of the other sectors. So I think it's fair to conclude that the 2018 data shows that PAFs have been a success in building philanthropic culture in Australia. And since their introduction in 2001, 20 years ago, some 1,800 families are now actively engaged in philanthropy through the use of private ancillary funds. And as a final thought, and a bit of a lead into tomorrow's session perhaps, if we look at what we see within APS itself, we've actually seen a much stronger growth in giving funds, as we call them, or sub-funds within our public ancillary fund. And when we explain the options and the pros or cons of PAFs against giving funds, we are finding increasingly philanthropic-minded people are opting for the integrated service that's offered by a giving fund in the APS Foundation. And while that perhaps might dampen some of the PAF statistics, it's actually reflecting still, though, a building of the philanthropic capital and the level of giving in the community. Thank you.
Thank you, David. And Daniel, if I could ask you to take the microphone, please.
Sure, and thank you, Alex. And I'm not sure if you've got my slides up. There we go. No, thanks for that. And I'm with AskRIGHT, a fundraising consultancy, and as PAFs head towards their 20th year, we head towards almost our 15th year in researching PAFs. Every month our people look at which new PAFs have been created, which ones have been closed, and the details of the individual private ancillary funds. So if we look at these, I just echo the comments also made by others that we really welcome Table 4 back, the distribution categories data. This is really helpful. And whichever sector listeners to this webinar participate in, this is the one to look at, because this will give you an indication of what proportion of PAF distributions are going to the sector in which you are interested. So what we see with PAFs that they were created and made an important statement that philanthropists could receive a tax deduction at the point of placing their funds into their ancillary fund, yet distribute later. This is of the essence, and we'll see that there are now some significant repercussions of this. And as David said, PAFs are not the only option now, but they remain a solution for many. They're a very important part of the philanthropic effort. Every day I walk into the research team and ask them what interesting things they are working on, because the PAFs do varied and interesting work. But there's one particular point I'd like to point out, drawn from the statistics that are published in this report, is that the distribution from PAFs as a percentage of assets is in a significant decline. When PAFs began under a former name, there was not a distribution requirement. In fact, the previous prescribed private funds could accumulate significantly, but there has been for several years a requirement that PAFs distribute 5% of capital based on the valuation at the end of the last financial year. To indicate that the government really wanted PAFs to distribute, there was also, if that amount of 5% didn't equal at least $11,000. You had to distribute $11,000. When PAFs were not required to distribute 5%, the distributions were much higher. And you've seen over the course there a steady decline. And in fact, this year, overall, they don't quite reach 5%. Now, there are probably reasons for that. There may be some very large PAFs that are undergoing structural change or have permission from the ATO to delay distributions. But also to note that in the current day, when PAFs might be expected to give more because of bushfires, COVID, etc., they've actually asked for relief from the government to distribute less in the future and been successful in that. So they have permission to distribute less than 5% in coming years if they've distributed more than that this year. So they do wonderful work, but they were intended to give away, not to store up, and I think the whole community needs to encourage them in that.
Okay, thank you, Daniel. And Krystian, if I could ask you to take the microphone now and share your thoughts with us. I think you're still on mute there, Krystian, just for a moment.
Sorry, the quote, that's the quote of the year. No slides from me, but thanks, Alex, and the preceding speakers. And I acknowledge the traditional owners of the land on which I am located, the Wurundjeri people of the Kulin Nation, and pay my respects to their elders past, present and emerging. I just want to say thank you to ACPNS and to Miles, Murray and Alex for the work they do analysing not just this particular data but all the data that they do. It's a really valuable service, not just to people such as myself but the broader sector. Good data on philanthropy is so important. It helps us see where the sector's going, track performance, and we are getting better data. I mean, the advent of the arrival of the ACNC, provided sort of enhancements in terms of the data that's available. But as we just discussed in terms of sort of the way that the PAF data is presented this year with the multi-category for one of the cause areas, still leaves a bit to be desired. But even in, say, somewhere like the US, where they have more data, they have more granular data at grant level that you have to report and is made public by the Internal Revenue Service, even there are issues. So it's one of those sort of things that won't always be on the journey, and we'll probably never get the data that we exactly want. So it's interesting going to David's comments around the number of PAFs, and I think I looked at sort of the numbers at November 2019, and you probably have some more recent numbers, but I had 1,767 PAFs at November 2019. I suppose we could look at that as a success, and it's hard to know what we measure it against. But I also looked in the taxation statistics, one of the spreadsheets. I looked at the number of taxpayers in 2017-18 who had a taxable income above $1 million. So income doesn't equal wealth, but the number of taxpayers who had a taxable income of $1 million or more was about 14,000. And the total taxable income of that group was 35 billion, reflecting that some will have quite huge taxable incomes, some will have less. And look, there are some that have income of $1 million or more, but taxable income closer to zero, modelling themselves on Donald Trump. And then I looked at even taxpayers that have 500,000 to $1 million in taxable income, and that was 36,000, worth 24 billion. And I kind of think with that pool of income, which is not the same as wealth, but it does flow through to wealth, I think we should have more PAFs and we should have more sub-funds, and we'll talk about sub-funds tomorrow. I don't know how many PAFs we should have and how big they should be, but I think Pete Winicky once said at a Philanthropy Australia conference that he'd like to see 10,000 PAFs in Australia. And I would, that's sort of the number that I'd be heading towards. Maybe 5,000 would be good. But yeah, I think that there still is a lot of potential there, and we still don't have that uptake of structured giving as we would expect, given the wealth and increases in wealth that we've seen in recent years. Just a couple of other comments. I mentioned sub-funds, and I am doing research on sub-funds, and I will talk about that tomorrow in the context of the discussion around public ancillary funds. What will be interesting to see, and this also ties into the comments that David made around whether if there is strong growth in sub-funds, and anecdotally we know that there is, but it'll be interesting to see whether that's reflected more broadly, whether we'll see a corresponding sort of reduction in the number of PAFs being set up, or it might just be we won't see the increase in PAFs being set up that we would have otherwise seen. But that will be an interesting shift to see in terms of people being more aware of sub-funds, being more attracted to them given many of the benefits they have compared to PAFs. They have some disadvantages too, but that will be interesting to see. And one final comment before I make a wish is that it's interesting to see how long a time it took for PAFs to recover after the GFC. The GFC impact on PAFs also corresponded to some regulatory uncertainty with the sort of 2009 PAF guidelines sort of process that sort of got some people, you know, a bit concerned about minimum distribution rates of 15%, etc. But there was quite a slow sort of return to sort of the creation of PAFs in terms of larger numbers and the amount of distributions, etc. And it'll be interesting to see what happens after this recession, given that this is it's kind of a bit of a different recession to the GFC, and that it's based more on an exogenous shock rather than an endogenous shock like the GFC was, and that actually stock markets have performed comparatively well in the last year when compared with the real economy. So it'll be interesting to see whether there's a different sort of reaction to this recession that we're in the middle of right now. And I'll conclude with a wish, and it's a wish in relation to better data on philanthropy. My wish is that when PAFs submit their annual returns to the ATO or the ACNC, which then provides them to the ATO, they have to list every grant that they make and provide the ABN, which is where the sort of division of cause areas is sort of done. My wish would be that they could tick a little box, and they could even tick two boxes. Tick a box saying that they consent to their data being, grant level data being shared, and their name being shared for the purposes of being inputted into Philanthropy Australia's Foundation Maps platform. And then there's a second box they could tick where they say that they want to be anonymous, because some of them might be happy for their grant level data to be shared, but they want to be anonymous, and there is that option under Foundation Maps Australia. I think that, you know, that would be a really good thing in terms of enriching the data that we have on PAFs in particular. It's wishful thinking. I don't expect it to happen, but stranger things have happened, and I'll conclude on that note.
So thank you, Krystian. As ever, thought-provoking, and I agree it'll be interesting to watch out for a substitution effect happening between sub-funds within public ancillary funds and the establishment of new private funds in the coming years. So Krystian has ended on a wish, and I think it would be nice if we could briefly go back to you, David, and to you, Daniel. Do you have a wish for private ancillary funds that you might want to share with us? You can wave a magic wand.
I think one thing that applies for not only private ancillary funds but also the public ancillary funds would be also to get a bit of data around their performance in terms of the investment performance. Yes, I agree with Krystian. Good to know what they are supporting, but equally this is community money that is being managed under the stewardship of in this case 1,800 different families, but it's community money. So I think we should know a little bit more about the investment returns that are being achieved by the various trustees.
Thank you, David. And Daniel, wave your magic wand. What would you like?
I would split my wish between encouragement of them and promotion of the great work they do with openness. These are taxpayer subsidised funds. We've all given relief for this, and it's currently being meted out at at a lower rate than perhaps was initially intended. Mm-hmm. So more of it.
More of it. Okay. And also on the right of your screen there is the links to the QUT research repository where you can download more research about ancillary funds and the tax statistics over a time series. Thank you very much for joining us today, and hopefully we'll see you tomorrow.